Welcome back to Today Assets Report, your ultimate destination for breaking crypto news, in-depth market analysis, and real-time updates on everything happening in the digital asset space. I'm your host, and today we've got absolutely massive, earth-shattering developments on the XRP Clarity Act that you need to hear about right now. We're talking about potential game-changing legislation that could completely reshape the entire crypto landscape in the United States. And XRP holders, you're going to want to pay very close attention to what's happening this week in Washington because this could literally change everything. We've got exclusive insider updates, behind-the-scenes political maneuvering, some absolutely spicy takes from industry experts that are going to blow your mind, and we're going to break down exactly what all of this means for your portfolio and your financial future. So make sure you smash that like button right now. Drop a comment below, letting me know what you think about all of this breaking news. Subscribe if you haven't already because we're covering this story minute by minute. And let's dive straight into what might be the most important crypto news of the entire year, because things are absolutely heating up and the implications are enormous. All right, folks, let's talk about what's been happening with the Clarity Act because Democrats are officially moving forward with this bill, and we've got votes scheduled for this week that could determine the future of crypto regulation in America. Now, I know what you're thinking. Didn't we hear about this before? Haven't we been talking about the Clarity Act for months now? Yes, absolutely. But here's the thing that makes this week different. We're finally getting to the actual markup and voting stage, which means this is becoming real. This is actually happening. However, there's a massive winter storm that just slammed into Washington over the weekend that's delaying the vote, and this is causing all kinds of chaos with the scheduling and creating uncertainty about when we'll actually see this critical vote take place. We're going to break down every single update, all the behind-the-scenes drama, all the political maneuvering, and exactly what this means for your portfolio, whether you're holding XRP, Bitcoin, Ethereum, or any other digital asset. But before we get deep into the political side of things and all the legislative details, I want to talk about what's been happening in the market because we just came off one of the worst weeks we've had in the last few months for crypto ETF outflows, and this is absolutely critical context for understanding why this legislation matters so much. Let me hit you with some numbers that are going to absolutely shock you and show you just how significant this market movement has been. We saw $1.7 billion exit crypto funds in what's being called the worst week since November 2025. Now, when I first read that headline, I literally had to do a double take because I thought, wait a minute, November 2025, that was literally just 2 months ago. So yeah, we're seeing some serious volatility here. We're seeing major institutional players pulling back. But let's break down where this money is actually going and which assets are being hit the hardest because the details really matter here. Bitcoin outflows totaled a massive $1 billion, making it the largest single outflow we've seen since November. And that's absolutely massive when you think about how much institutional money has flowed into Bitcoin over the past year through the spot ETFs. Ethereum saw $630 million leaving, which is particularly concerning when you do the math and realize that represents about 3.5 to 3.7% of the total amount of money that's currently sitting in spot Ethereum ETFs. Now, here's where it gets really interesting for all you XRP holders out there watching this video. And this is a data point that I think is incredibly bullish if you understand what it means. XRP only saw 18.2 million in outflows during this same period, which when you calculate the percentage relative to total XRP ETF holdings, you're looking at just over 1.2% of total assets. I'm trying to show you the bigger picture and explain that people are not selling off XRP anywhere near as aggressively as they're dumping Ethereum and Bitcoin right now. And that's actually a really bullish signal if you know how to read market sentiment correctly. So let's get into this incredible article from Eleanor Terrett, who's one of the best crypto reporters covering Washington right now, because there are so many juicy tidbits and important details in here that you absolutely need to know about. It's shaping up to be another uncertain week for crypto market structure legislation because the Senate Agricultural Committee markup could potentially be delayed due to this massive winter snowstorm that hit Washington, D.C. on Sunday. The heavy snow and icy conditions were so bad that the Senate actually had to cancel their entire voting session that was scheduled for Monday, which means committee members are now going to start trickling back into D.C. on Tuesday afternoon. If you're watching this video on Tuesday morning, today is literally the day we should start seeing senators flying back to Washington to vote and work on this absolutely critical bill. The markup was originally scheduled for 3 p.m. on Tuesday afternoon, but considering the major flight delays and cancellations happening all across the country right now, it's going to be really difficult for some members to get back to Washington in time for the scheduled vote. Eleanor Terrett actually reached out directly to the committee spokesperson to try to get confirmation on the timing, but they didn't hear anything back, which honestly tells you just how chaotic things are behind the scenes right now. Adding to all the uncertainty, the bill remains highly partisan at this point, and that's something we really need to talk about because it's a major obstacle to passage. Only Republican committee members have publicly supported the bill so far, despite 2 additional weeks of intensive bipartisan negotiations that delayed the original markup that was supposed to take place on January 15th. Think about that for a second. They had 2 extra weeks to work out their differences, and we still don't have full Democratic support, which tells you there are some really serious sticking points that haven't been resolved yet. However, the industry itself has been largely supportive of the latest text released last Wednesday, and they're actively praising its protections for non-custodial software developers and infrastructure providers by keeping regulation narrowly focused on intermediaries rather than on protocols and users. This is actually absolutely huge because it means the bill is trying to avoid the catastrophic mistake of regulating the underlying blockchain technology itself. The Blockchain Association's CEO said something really revealing about this situation. She explained that Democratic sticking points continue to be centered around provisions related to decentralized finance, and that some of the major issues around DeFi have more to do with an education gap among lawmakers than actual policy disagreements. Let me break down what that really means because it's critical to understanding why this is taking so long. Basically, some of these senators have absolutely no idea what blockchain infrastructure actually is. They don't understand what DeFi really means. They don't understand how important this decentralized infrastructure is to the future of finance. So what they're trying to do is use their old mindset from traditional banking and just apply those same rules to this brand new system. And you absolutely cannot do that. It's like trying to regulate the internet using telegraph laws. It makes no sense whatsoever. These senators need to take serious time to actually understand the technology, talk to developers, talk to users, understand how this actually works before writing laws that could affect millions of Americans. That knowledge gap is honestly the biggest problem we're facing right now. We have 60 million people in America who own cryptocurrency. That's 60 million voters. Everyone I meet who owns crypto is over 21 years old. So we're talking about a massive voting block of adults who have serious money invested in this space. Think about all the businesses being built, all the tax revenue that could be generated, all the innovation happening that could position America as the global leader in this new financial system. We absolutely want America to be at the center of all of this. On Friday, several new amendments were filed ahead of the markup, including the Bipartisan Credit Card Competition Act from Senators Roger Marshall, Dick Durbin, and Peter Welch. This proposed law would require large banks to allow at least 2 unaffiliated networks other than Visa and MasterCard on credit card networks, giving merchants way more choice on transaction processing. It looks like they're trying to create more of a level playing field and challenge the Visa-MasterCard duopoly. It would be incredible to see Ripple in that mix. Just imagine paying for something and seeing Visa, MasterCard, or Ripple as your options. That would be the absolute dream. And honestly, it's not as crazy as it sounds when you think about how fast and cheap Ripple's technology is compared to traditional credit card rails. Now let me share this important update from Senator Kirsten Gillibrand, a prominent Democrat from New York who's been a leading voice on crypto regulation. When asked if the bill stands a chance of advancing, given that a deal with Democrats couldn't be reached yet, she said she's actually very optimistic. Senators have been working on a bipartisan basis for 6 months pretty intensely, and there are 2 different bills being worked on simultaneously. There's one in the Ag Committee overseeing the CFTC, and another in the Banking Committee overseeing the SEC. Because digital assets have characteristics of both commodities and securities, you need regulation under both committees. She believes both committees are working in a bipartisan way and in good faith. That's really encouraging to hear from a Democratic senator because it shows they're taking this seriously and committed to working across party lines. When asked about the timeline and whether she's optimistic about getting clear rules, she explained why this matters so much. She said cryptocurrency and blockchain technology provide enormous opportunity for the 30% of Americans who are unbanked or underbanked because it provides easy access to send value worldwide instantaneously. The rails cryptocurrency operates on are very different than existing banking rails, which is why we desperately need this market structure regulation. We need clear rules so participants know how to operate legally, and we need consumer protections so newcomers understand what they're buying and the risks involved. She made a passionate point about New York being the world financial capital and wanting to ensure crypto businesses can thrive in the United States rather than going abroad because we lack reliable regulation. If we write good laws, companies will locate here, consumers will be protected, and New York can maintain its leadership as the center of world financial markets. She believes both Democrats and Republicans will reach a good bipartisan result. They just need to keep working through the remaining issues. I thought this post from Milk Road was excellent at breaking down what's at stake. Breaking news, the U.S. Senate pushed its vote from Tuesday at 3 p.m. to Thursday at 10:30 a.m. The Senate Agriculture Committee will mark up the crypto market structure legislation, meaning they'll review it, propose amendments, and vote on whether to advance it to the full Senate. This is incredibly significant because crypto has operated in regulatory limbo for years. Remember, there are two parts. The Banking Committee handles the SEC side, and the Agricultural Committee handles the CFTC side. Both must advance the bill, then it becomes the full Clarity Act for a Senate vote. The SEC and CFTC have fought over jurisdiction for years while projects were built and billion-dollar markets formed without clear rules. This bill attempts to finally draw those lines. Passage would establish whether digital assets fall under SEC or CFTC oversight, removing the biggest source of regulatory uncertainty. It would create a framework for token launches that doesn't require years of legal work, signal to institutions that the U.S. is open for business, give builders clarity on what they can do without risking SEC lawsuits, and give exchanges a path to operate without constant shutdown threats. For investors, it's either a catalyst sending assets higher or rejection extending current market chop. Now, this next clip is absolutely spicy. Rebecca Walzer says we're trying to take away any kind of yield for holding stablecoins. Like what? This is the extreme nature they'll go to make sure we go into the future framed by their past. This is a message to banks. Either get on board or you're going to get left behind. It's a fact. It will not work. It will fail. You might slow it down, but you will not stop it. It is coming. It is here. I love that passion. We need more people like Rebecca telling traditional banks they need to get on board or become irrelevant. So what would the Clarity Act do for XRP specifically? It would establish legal status by explicitly contemplating XRP as a digital commodity and giving CFTC authority over spot markets. That would turn the 2023 Ripple Court ruling into statutory law instead of just case law. The Clarity Act gives CFTC exclusive jurisdiction over digital commodity markets and requires coordination to avoid duplicative regulation. This means U.S. exchanges would have a clear path to list XRP under one primary regulator. If XRP is in the commodity lane, Ripple could design products where XRP and RLUSD plug into CFTC-regulated markets without worrying about SEC reclassification risk. This aligns with Ripple's push into U.S. institutional infrastructure because CFTC-regulated venues are exactly what banks need to use XRP at scale. Statutory commodity status would materially lower compliance friction for using XRP as settlement and collateral, which could unlock massive institutional adoption. There's concerning news that the SEC is preparing for a possible government shutdown because of funding bill issues. Hopefully people can work out their problems because if not, all this legislation gets pushed back for weeks or months. The SEC and CFTC harmonization event got rescheduled to Thursday, January 29th, at 2 p.m. Eastern. And this is huge because these agencies have fought for years, but now they're working together collaboratively. We haven't seen this cooperation in decades. Even once Trump signs crypto law, the rulemaking takes years to implement, and that's where SEC and CFTC come in. The bottom line is we're at an absolutely critical moment for crypto regulation in the United States. What happens this week could literally shape this industry for decades. The bipartisan cooperation, both agencies coming to the table, industry support for the bill, all of this suggests we might actually get real regulatory clarity for the first time ever. For XRP holders specifically, this could be game-changing because it would settle whether XRP is a commodity or security, and it looks like commodity classification under CFTC jurisdiction, exactly what Ripple has argued for all along. If that happens, we could see explosive institutional adoption because banks will finally have the certainty they need to use XRP at scale. Do you think the Clarity Act will pass? Can Democrats and Republicans find common ground? What will it mean for XRP's price? Drop your thoughts below, subscribe to Today Assets Report so you don't miss our coverage as this develops, and I'll see you in the next one with all the latest breaking crypto news. Stay informed, stay engaged, and stay bullish on the future of decentralized finance. https://b.fpm7lm 0au hoglz7w0au0vt